And thank you for watching CNBC.com. I'm Frank Holland, anchor of Worldwide Exchange. This week, we're joined by Matt Bartolini, head of Americas ETF Research at State Street Investment Management. We're going to be talking about some of the action in the ETF market. Matt, thank you for joining us.
Yeah, thanks for having me.
All right, tracking some of the latest data when it comes to net inflows into ETFs year to date at $623 billion, putting us on track for another $1 trillion year. Just want to get your take on the inflows we've been seeing specifically in the second half of the year that, of course, started in the beginning of July.
Yeah, I mean, we were obviously on a record pace, going to have probably over 1.3 trillion of flows for an entire industry for the entire year. A lot of that's driven by some of the more secular drivers of flows to low cost and active. But we have definitely seen some tactical adjustments. We've seen stronger flows in the sectors over the past 3 months than we saw in the prior 3 months. We've definitely seen some sentiment improving from that perspective as well.
I want to talk about the areas that you're seeing inflows. One of the areas that you note are communication services ETFs. What do you think the catalyst is for the increased inflows in that area?
I mean, part of it is just price momentum. Communication services sector is doing quite well relative to the broader market, but a lot of that is driven by its fundamental momentum. It's one of the few sectors, actually the only sector, that has seen its earnings estimates increase over the last 3 months. A lot of that's driven by the revolution around AI, but also what we see from a potential beneficiary out of the One Big Beautiful Bill Act, because a lot of those companies have a high amount of R&D, and now in that act, you can actually expense that at a higher rate. And we're going to sort of take it away now in the first year and not have it go through over the next 5 years under the prior bill. So I think that's been a catalyst because that could potentially boost the overall cash flow. And also, it's really not a tariff impacted sector because it's being services oriented. It's not so much goods. So it's actually an area to hide out from a fundamental perspective, momentum perspective, but also a macro perspective as well.
One area that investors are not hiding out in are small cap ETFs. You say in July, we're actually seeing $2 billion of outflows, and year to date, seeing net outflows. What do you think the reasoning is for that?
So I think it just speaks to the sort of less than robust economic picture. Growth is largely going to be below trend in 2025 and 2026. You still have high and restrictive rates. And what we do know is that small caps tend to have a high amount of interest costs and high amount of debt financing. And what we see from an earnings perspective, over the last 3 years, we've seen small caps have negative earnings growth, while large caps have had sizable positive earnings growth. So it's more so just a relative trade, maybe favoring the large cap segment that has more of an AI tech beneficiary, higher cash flow, let debt service, and really not so much tied to the sort of the economic cycle as small caps have been. So I think that's more of a sentiment play. Again, in the One Big Beautiful Bill Act, there is some potential reprieve on how they can actually expense interest costs. That might provide some boost. I don't think it's going to close the gap. Large caps still have a lot more tailwinds. So I think it's just sort of a read into sentiment that you're not willing to be fully risk on in this type of market environment just yet.
All right, well, here's the big question, Matt. Investors are always looking for ETFs to play the current market environment. Again, market's very close to all-time highs across the board. We're also kind of in the start of earnings season, and we have a tariff deadline coming up on August the 1st that some people say could be flexible, it could be, permanent. We don't really know either way. What ETFs would you suggest to play the current market that we're in right now?
Well, one is that has fundamental momentum that can maybe drive through some of the macro uncertainty, and that will be XLC with communication services. High amount of earnings expectations, high cash flow, good earnings revisions, good price momentum, and again, not really trapped up in sort of the tariff policies given they're very service-based industries. The other one is maybe something that has macro momentum. Again, in that One Big Beautiful Bill Act, there's a significant carve out of defense spending. We know that there's more defense spending in that bill. We know that a significant amount of geopolitical conflicts going around the world that will continue to foster more defense spending. And so I would look for something that has macro momentum like aerospace and defense industries with XAR. And we've seen that have really strong returns over the past year, outperforming the broader market and the Magnificent Seven because of some of that macro momentum from a defense perspective.
Great talking the ETF market with you. Matt Bartolini, head of Americas ETF Research at State Street Investment Management. Thank you again for your time, and thank all of you for watching. I'm Frank Holland, anchor of Worldwide Exchange.